Walmart reported earnings and investors loved it. In this video, I'm going to do two things. I'm going to tell you the ways I think that Walmart as a business will continue to grow. And I'm also going to give you my full valuation. We can look at what I think Walmart stock is worth. Welcome to the Stock Sale Flyer. My name is Aaron. None of this is financial advice. Let's get into it. So you can see here, Walmart stock went to an all-time high after their earnings beat. You're seeing all these positive headlines in the news, all these positive narratives in the news, high income shoppers, e-commerce gains. Walmart is firing on all cylinders, and that includes its newer businesses that go beyond groceries. So I want to talk about the ways I could see Walmart continuing to grow. You know, this is a company that's so well managed, and for all of the criticism that it gets from people or tends to get from people, they really are an extremely well-run business, from logistics, all of their own trucking that they do, everything that they do that drives efficiency. It's really a well-run business, and you've seen them expand over time into new markets. So, you know, they started to get more into grocery, and then they started to get more into e-commerce. So global e-commerce sales grew 21%, led by store-fulfilled pickup and delivery and marketplace. And people, I've been thinking about this, you know, people that maybe would tend to buy things online over the last 3-4 years, as curbside pickups become more of a popular thing. Why not just order it on the app and go pick it up at the store, and you don't have to wait the 2 days or 3 days or however many days it is for it to be delivered to your house? And so I think Walmart is capturing more of that market share here, or at least growing their own business, if nothing else, with that curbside availability. Global advertising business as well. So as Walmart expands into more online commerce and grows that footprint, they're able to also grow their advertising business. It says here, global advertising business grew 24%, including 26% for Walmart Connect in the US. So Walmart's going to be able to find these different methods of revenues, like advertising, getting more into e-commerce. And I see this as being a way that the business could continue to grow more into the future. They've introduced things like, you know, Walmart Pay. At some point they introduced that. So getting into those types of things, again, kind of more of it being in-house. And it's all about that efficiency that I talked about there. Walmart really creating a shopping experience where they're handling a lot of the different moving parts on their own, or at least giving more customers the option to use Walmart products or Walmart services in their shopping experience with Walmart. So this is stuff that just shows how efficient of a business this is, and why I think it can continue to have a good amount of upside going into the future. Now, that said, we do have to look at what is the stock worth, and is it currently overvalued or not? And I'm going to get into that here in just a moment. One of the things that I did factor into my valuation that I'm going to give you today was Walmart's guidance. So here on the quarterly release, you can see, you know, second quarter guidance, consolidated net sales, they're looking at an increase of probably 3.5% to 4.5%, and adjusted earnings per share of 62 cents to 65 cents a share for second quarter. And for the full fiscal year, they're guiding for consolidated net sales to the high end or slightly above original guidance, which was an increase of 3 to 4%. For adjusted EPS, they're guiding to the high end or slightly above the original guidance, which was $2.23 to $2.37 a share. And for capital expenditures, they remain unchanged from the original guidance, approximately 3 to 3.5% of net sales. And the reason I highlighted those things is because those are things that I factored into the valuation that I'm going to give you here just in a minute. All right, so here is the Walmart valuation. You can see here for the 2025 fiscal year, I have expected total revenue of $674.53 billion. And then 2026 expected $700.54 billion. I believe these both came from analyst estimates that I found, and I thought that they were reasonable, so I did go with those. I think they're reasonable because of the type of growth that Walmart is seeing right now. And you see a lot of the narratives and the headlines about people looking for value because of all of the pressures they're facing with high interest rates and other things in the economy. And so Walmart is benefiting from that. You know, the headlines about high income shoppers moving to Walmart. So I could see these revenue growth numbers holding true for the 2025 and 2026 fiscal years. You see 2023 and 2024 were also quite strong. Revenue growth in both of those years were over 6%. So Walmart is in a strong growth era in terms of total sales. Now, going forward from 2027 expected fiscal year onward, I did go back to what their 10-year revenue CAGR was according to quickfs.net, which was 3.1%. I don't know that Walmart will continue to grow revenues at these higher numbers going out into the future. And so I didn't want to go overly optimistic with the long-term revenue growth. And I did go with a 10-year valuation on this one. I thought that that made sense for this particular company. Now, for net income, you can see they're guiding to the high end of the original guidance or slightly higher. $2.37 per share was the top of the original guidance. So I multiplied this by the basic weighted average common shares outstanding from the Q1 2025 earnings release. And that gives you an estimate here for what their net income for the year, the fiscal year could be. That puts them at 2.83% net income margin. With the growth in e-commerce and advertising, I could see them growing this net income margin going forward. And that also translates with the net income estimate for the following fiscal year, the 2026 fiscal year. I took an analyst estimate of $2.62 a share, or it was I think it was average of some analyst estimates. And I multiplied that by the basic weighted average common shares outstanding from the Q1 2025 earnings release. And that gets you a net income margin for that year of 3.01%. And I use 3% going forward because I believe, as you can see here, I believe Walmart can get to a 3% net income margin consistently with growth in things like online shopping and advertising and other things that they're building into the business. And they're always driving more efficiency. So I think that that's a realistic target that Walmart can get to. For free cash flow, now this is something they're investing in capital expenditures. So I have a note here. They're guiding to 3 to 3.5% of net sales in 2025, in the 2025 Q1's earnings release for the fiscal year. So I took the total revenue for the 2025 fiscal year and I multiplied that by 0.035, so 3.5% to get this CapEx number here. I think that was pretty close to a number I saw somewhere else, maybe in their 10K or something like that. So the point being here is that their capital expenditures have been increasing as they've been investing in parts of the business for future growth. They're investing in their stores. I know that I've noticed in recent years some investment made in 1 or 2 Walmarts near where I am anyway, to kind of spruce those stores up a bit, growing out all the curbside pickup stuff, all the other things that they're doing when you dig into the company. So you see things like this in their 10K, like we have taken certain strategic actions across our segments, including an increased emphasis on investments in automation and supply chain, as well as diversifying our earning streams through category and business mix. Again, they're moving into advertising, payment services, things like that. So Walmart is building these parts of the business out, and that is likely taking some of these higher capital expenditures. I tried to really get a sense of the long-term capital expenditures for this capital allocation strategy, and I couldn't find a lot of specific details going out far into the future. You can see here, they said, this is from the last 10K again. So our strategy includes allocating the majority of our capital to higher return areas focused on automation such as e-commerce, supply chain, and store and club investments. The following table provides additional detail regarding our capital expenditures. And you can see the total capital expenditures increased between 2023 and 2024 quite a bit. And then obviously their guidance would suggest that capital expenditures are increasing even more for the 2025 fiscal year. So they are investing in the business. And this is why when I did this valuation, you're seeing lower free cash flow numbers for the 2025 fiscal year expected. You can see that this was a ticker analyst estimate I got from May 17th, 2024. And I said that the lower free cash flow to net income makes sense, given that Walmart seems to be investing more in the business, which is going to lead to more capital expenditures. Again, for the 2026 fiscal year, you see a ticker analyst estimate, and you can see that it would be a higher free cash flow number than the year prior, and the free cash flow to net income would increase some. So then what I basically did was I took this and I said, okay, so for how many years out are they going to be investing in the business like this? I didn't want to go right back to, some of the prior numbers like 90 something or 100% free cash flow to net income. So I kind of tapered this up. So you get 80% in 2027 fiscal year, free cash flow to net income, and then 85% the following year, 90%, 95%. And then after I got back to 100% free cash flow to net income for 2032, I started to use for the free cash flow growth rate, what is currently listed on quickfs.net as the 10-year free cash flow CAGR, which is 3.5%. And so I carried that forward to estimate those free cash flows once Walmart gets back to, around high 90s or 100%. In this case, I had them get back to 100% and then use that free cash flow growth rate that's in line with the 10-year CAGR that's currently listed on QuickFS for the last few years in this valuation. Then you get a perpetual growth rate of 2.5%. I used the diluted weighted average common shares outstanding from the quarterly earnings release. You've got your numbers down here for the weighted average cost of capital. I went with they're guiding 25 to 26% effective tax rate. So rather than calculate that, I went with 25.5% as the tax rate. You can see the 10-year bond rate I used, the beta I used, the return to the market I used, the market cap, and you get a weighted average cost of capital here, which I use then as my required rate of return. And you can see I get a fair value of equity of $59.88 a share, 10% margin of safety, it'd be $53.89 a share with a 20% margin of safety. You'd be looking at $47.90 a share. Walmart closed May 17th, 2024 at $64.65 a share. Now, if I were to get this, I would have to get it at around that 20% margin of safety number for me to really be interested in investing in the stock. Maybe around $50, I might be interested in the stock. But really, I'd like to get it closer to that 20% margin of safety number. Walmart being such a quality business with potential for future growth in new areas and new ways. I don't want to speculate what they might get into in the future. I just know that this company is really well run. So, maybe I don't need to go all the way to that 20% margin of safety. I'd have to reassess my thinking if it got closer to those levels. But when you look at the 2029 fiscal year, if there's 500 million fewer shares outstanding than I had in this number, I use the diluted weighted average common shares outstanding number from the Q1 2025 fiscal year quarterly earnings release. There's 500 million fewer shares outstanding than that. And so I'm factoring in some buybacks here. You've got at a P of 30, $91.11 a share if this net income number for the 2029 fiscal year held true. So after that fiscal year, your trailing 12-month multiple at a P of 30 would be that $91.11 number. So, if I'm trying to double my money in 5 years, I'd have to get this stock for around 45, 55 a share. I could see it being worth a little more than that because of the quality of the business, but I wouldn't want to go too far in trying to chase this stock, because I do think that you've got to consider all those factors when making the decision, or at least I do. I don't want to chase a quality business and overpay for it just because it's a quality business. I also have to get it at the right price. Now, after the 2034 fiscal year, if you had 1 billion fewer shares outstanding than the number that I had here, so that would be basically 7,084 million shares outstanding, you would be looking at a P of 30 at $113.62 a share if the net income number here of $26,830,176,000 in net income actually became true. You're going to get dividends too, so maybe you go to $50 and maybe I could go to $50 and be comfortable with that. with dividends on going along with, what those multiples say. I do think 30 times is about the max I would be willing to pay for a Walmart, or what I think the value of it would be in the future. I'd be more comfortable around 20 to 25 times earnings. So I do think that the stock is overvalued right now a little bit based on future cash flows and based on future earnings multiples. It's something where I would have to get it at a discount to the fair value based on the free cash flow, future free cash flows. So I'd have to get it with a margin of safety for me to be interested. If it got to around $55, I might start to look at it again. If it got to $50, maybe I would, invest some and leave some room to add. But I would definitely not look to buy, at least my personal opinion on this, not financial advice. I would not look to buy Walmart at the current levels off the earnings hype. I think it could go up further from here, especially with the earnings hype. But for me, as much as I think this business is really well run, I don't think it's worth it at these levels. So that is where I would be looking at it, though. Thanks again for joining me today. If you haven't yet, please follow me on X at Stock Sale Flyer. Please like, subscribe, click the bell to get the notifications for future updates, and drop a comment. Let me know what you think of the valuation, and what you think of Walmart as a company and where its future might be headed. Thank you again. Take care.